doing something different with their accounts
So,
than
Al,
they
in this
are
final
with their own
topic, I want to
accounts, with their
continue
own
that topic
assets.
of
You
retirement
mentioned
and self-directing,
24-hour
basically
trading. Futures and
making your
Forex
own
are open 24 hours.
decisions
When you talk about
without the fees. You talked
probabilities,
about people
isn't
are making
the
their
potential
own
for
decisions in the retirement
probabilities
accounts
greater if you
already,
have
but they're
24
being
hours
charged
worth of
for the
activity as
honor,
opposed to
as you
six and a
said,
half hours
to do
with the
that?
stock
And that's
market?
unfortunate
And
because
isn't the
fees can really
probability
impact somebody's
greater if
retirement
you
accounts
can
over the course of many
participate
years,
in all
5
three
years, 10 years,
directions?
15,
The assets
50
that we're
years even.
talking about,
So think about that.
futures,
If you're
Forex,
able
options
to
can be used in
minimize
up
or
markets,
lower
down markets,
fees,
and
how
in
could that
sideways markets.
impact
And you're right.
your
One of the
future?
things I talked
Would that
about with
change things?
mindset is
So let's
that
talk
you're
about
not
some
going
of
to be
those
right
techniques and
100% of the time.
strategies
If
to lower
you are
fees,
getting into
and you don't
something,
have to be in
no,
a
and you don't have to be.
self-directed,
In
we'll
the
say IRA.
the point is,
Well,
you manage both
compared
directions.
to
You
what
manage
you
a trade
have
regardless of
access
what's
to in a
happening.
401k
And or 403b, the fees there are significant, and most people have no idea what the total fees are that they pay. But just having a self-directed account where you eliminate the fees, that is probably the best thing that you can do for yourself, eliminating those fees, since you're already making your own decisions. Even if you just still invested in the same things that were available in your 401k, you've eliminated the fees. So that's a huge advantage to begin with. But I mentioned before, in your self-directed accounts where the fees are gone, you can also use those mortgage type assets where you're using the leverage. You're putting a smaller amount down to control a larger portfolio, but you can also use insurance. You can't do that within your 401k or 403b. There are strategies that we teach our students that basically function as an insurance policy on your portfolio. And remember this, when you retire, you have unfortunately a limited amount of time. So if things happen that are not to your advantage, if there's something that is detrimental to your accounts, you have less time to kind of dig out of whatever hole that detriment has put you in. So number one, know how you can take advantage of the markets, because when you go into retirement, there's really three things that you need to be concerned about. Your plan, your retirement plan, should include protection on what you have, because that capital preservation is number one. It should also include a strategy, an investment strategy that shows you how to generate cash off of what you have in retirement, and then want to grow that portfolio instead of just having whatever that amount is that you have achieved in your working years for your retirement. Why not, instead of just drawing that down and dwindling it down to the point where you may have more years left than you have money in that pile, why not grow that pile? Grow the pile so maybe you've got something that you can pass on to your kids, or grow it and just have more fun in your retirement. So those are a number of things that should be part of your retirement plan. And then the big one is, what rate of return do you need to get to the retirement that you hopefully will have? And that will change. That will vary from person to person. And it may change over the course of your retirement years based on what's happening in the markets, based on what's happening with inflation and health and so forth.
Well, the crazy thing is, so many people are missing out on these opportunities in their retirement accounts, of missing out on lowering fees or learning techniques on how, or techniques on strategies that are designed to do that. Now, we kicked off the show with how great these markets are right now. We're seeing all the the major stock markets all closed roughly at an all-time high,
right?
Which is a great thing for the average investor. Now, people think that's going to go up forever. It's not going to. But what are some techniques and strategies that investors can do to continue this growth in this up market, but how to do that comfortably and not worry about what if?
Yeah, the what ifs are important because, again, we can't control what the market is doing. All you can do is control how you respond to what the market is doing. So what's important there? The important thing is knowing what to do if something happens that's different than what's happening now. If your portfolio is really developed and put together based on the market going one direction, what are you going to do if it stops and starts going the other direction? You shouldn't have to stop and think about that. I use this analogy. I've used it before. It's like taking up skydiving and jumping out of an airplane, then remembering you don't have the parachute. You can't turn then and say, "Oh, hand me my parachute." It's too late then. And the same thing is kind of true in the markets. Don't worry about the different directions. It's just an opportunity in a different way, but you need to be prepared so that that direction doesn't become let's say, a hole in your income bucket or your wealth bucket.
Yeah, it's all about being more proactive rather than
It is.
reactive.
It is.
So with these, opportunities that we're seeing, how can somebody talk more about that insurance on the portfolio? Because a
Mhm.
lot of people want to be able to protect what they have.
Sure. There's a couple things you can do to protect yourself. One is identifying a proper target, a proper profit, and then don't be afraid to take a profit. That's one of the things that buy and hold strategy really kind of ignores is taking a profit, and that's there's no problem. There's no negative in doing that. That's
Nothing wrong
one
with
thing to
that.
protect yourself, but then also have something in there that kind of hedges your portfolio is like an insurance policy on a portfolio. You can even do that with your with your 401k, 403b, with a portfolio setup outside of it that will kind of hedge it. But those are the things that we talk about. How do you do that? Do you know how to protect what you have? Do you know how to have an insurance policy on your portfolio? Those are the things that we talk about in these classes. That's the kind of thing that helps you sleep at night. Because again, especially when you go into retirement, you don't get a do-over. You've worked maybe 40 years to get to that point where you're retired, and the last thing you want to do is to have to sit down with a piece of paper and write down the things you're going to cut out of your life in retirement. You should be taking that piece of paper and putting on that a list of things you want to add to your life.
That's that positive vibe too.
Right. Yeah. And when you go through a lot of your working years kind of delaying some gratification because Wall Street is telling you cut back on things, just don't do all these frivolous things like going to Caribou or Starbucks. Who's sitting in Caribou and who's sitting in Starbucks waving at these people that are passing by? It's our students that might be in there
That's
trading.
because they really like coffee, though.
They love coffee.
We always have coffee around here, and it's always empty. It seems like.
You can come in here and have coffee. That's the other thing that brings up another great point about the Online Trading Academy is a community. And we have every once in a while we'll come in. I'll come into my office and there'll be 2 or 3 students sitting in our break room, just talking to each other about some of the things they're doing. They're going to go over their trading and investing. You become part of a community of like-minded people that are more than willing to help give you some guidance and help and just kind of make sure that you're staying on track and that you're not violating some of the rules that our students have access to.
Yeah, I just want to double down on that community. I mean, just like anybody, doctors hang out with doctors. I used to be in construction. I have a lot of my friends were construction people. They still are actually, and you have that like-minded process, or I guess thought process, and then to help each other make better investing decisions.
Sure.
And that way you're not alone in the financial markets. You're not alone with just guessing on what to do. You're learning a technique, you're learning a strategy, but then you have that that accountability buddy. I think I said that right. To help somebody
accountability.
There you go. There you go.
That's how some people might pronounce it. I don't know.
Yeah, that's one of those tough words. We have a couple tough words we have a tough time saying around here. Al, you have some great words of wisdom every week, and last week I think I cut you a little short on them. Let's hear a good one this week.
Okay, you're putting the pressure.
No pressure.
There. Well, we always hear from people that say, "Hey, I've been listening to you guys for years. Finally decided to come in." That's procrastination. And here I'm going to say this: from one procrastinator, that's me, to another, which is probably most of you listening. Stop it today. With most things in life, we can put things off, and really, it's not a problem because we know that we can do it tomorrow or next week. If you play golf, the course is going to be there tomorrow and next week. If you want to go fishing, the lake is going to be there tomorrow. What about financial opportunities? Every opportunity available today will not be there tomorrow. Every dollar that could have been realized today can never be realized again. So every dollar missed, that's one that can never go to work for you, providing more dollars. That's the magic of compounding. The more you procrastinate, the more you delay what could be, what your full potential might have been. These great market opportunities we're seeing now may not be available tomorrow. Now, today is the time to take the first step.
Yeah, human nature is to say, I got to think about it. Well, let's think about it today and let's take some action. Same time, same place next week. Until then, retire young, my friends.